Hello and welcome to the Friday show of what I call The Dollar is Dead. For those of you that watch this, you know that every Friday I go over a basket of goods, alternatives to holding US dollars. For those of you that are new, that's the summary. Let me tell you why. US dollars go down in value. Currency, because of inflation, means you can buy less. You know this is the case because things have gone up in price recently. I've been doing this since February of 2024. Personally, I diversify all of my investments, and I've done it for a long time, but I wanted to do this every Friday to show over a period of time, kind of beat it into your head and show you repeatedly the results and what happens when you hold dollars versus holding other assets. I have to have my disclaimer, which is I am not a financial planner, not a financial advisor. This is just informational purposes only. Now, over time, markets go up and markets go down. So I always say you have to be careful. Have an emergency fund. I'll have links down below to emergency funds. I'm also going to have some additional information to show you how to execute a strategy like holding things other than dollars. It's not that difficult these days. They've made it very easy. The rich know this because the rich hold assets. I'm going to show you two things here before we get into what we track every week. First, there was a YouTube video that I saw recently of individuals in another country. I can't remember what country, but I think they had 50% monthly inflation, yearly, monthly, it doesn't matter. It was astronomical. And they basically said this: our currency is essentially worthless. When I receive my pay, I immediately buy stuff with it and hold assets because those assets don't go down in value, but the currency does. And I've been seeing over the course of 2024, since I started this in February, more and more articles in YouTube, you name it, saying, look, the rich hold assets. They have real estate, they have stocks, they have commodities like gold and silver, they have cryptocurrency like Bitcoin. We'll talk about that. This has been going up substantially. So that was the first thing. Second thing, I want to show you, this is called wolfstreet.com. Love this blog. They go into an article talking about delinquencies and bankruptcies, foreclosures, household debt, etc. Now, most of the things I do on my channel are to help you get out of debt. If you're not familiar, take a look at my channel. I've got an unbelievable amount of videos on how to get out of credit card debt, how to get rid of your car, how to pay off your house, all that stuff, and very unique ways to do that, as well as calculators to help you do it. Since 2020, right before the pandemic, home prices have exploded about 50% since 2020. Astronomical. I believe we're in a housing bubble. I think that's going to change here in the next year or so. We'll see. Then CPI, in other words, inflation, consumer price inflation, the inflation of what you pay for goods, over 20% during that same period. As you know, certain things are way more than that. Now, that was the first thing. In this article, as we go down, you'll see it shows, they've got a lot of graphs here. Total debt keeps going up, household debt. However, it looks like household debt as a percent of disposable income. What is that? Disposable income is basically your taxable income and maybe some interest on accounts that you have every month to spend on things, to spend on your home and your car, things like that. And they say, okay, what percent? So here it's showing we're pretty low. The lowest it got was during the pandemic. There's reasons for that. But here it's around 82%. It's been much higher, which means if people are only spending 80% of their monthly income, then they have, this is after taxes, then they have about 20% to save. So if it's around 83% here, they have about 17% to save. Not bad. Historically, that's not bad at all. Serious debt, meaning 90 plus days delinquent, serious delinquency, I should say, lowest right after the pandemic, but here it's back up to what? Still less than 2% historically. Hasn't been that way since 2006. Not bad. Number of consumers with foreclosures, low. Third-party collections, going after people's debts, low. Consumers with bankruptcies, low. So if all the things you're hearing, it's not all that bad. Okay, well, that doesn't matter to you as much because it's nice to see what's going on in the overall economy, but more importantly is what's going on with you as an individual. So if you've got debt issues, take a look at all those videos. Now let's get into how to save your wealth and make sure that you maintain it and allow it to grow so you don't lose that buying power. As this article showed, and you'll hear in the media, this is 1 year's worth of inflation month to month, 2%, 3%. But what they showed in that article when they said 20%, well, look over time. That inflation that went up has not gone away. Okay, good to know. First thing I go over, quite simple. We look at this every month. The FDIC updates the chart and they say, well, if you just had dollars, and these are what I would consider dollar equivalents, you just left dollars in the bank. Average saving rate, national debt rate, deposit rates, 0.45. Incredibly low. It's almost nothing. 6-month CD, no, I look at 3-month, short term, so that you could turn it into cash real fast. In 3 months, you got your cash back. 1.54. That's like a bank CD. You go with a treasury from the government, 4.73. You're not beating or barely beating inflation. So your money's sitting there losing value. Okay, so the first things I like to look at is, what about commodities? Typically, people talk about gold, which is up substantially. Here it is, 25.76. You can see I've got the chart here on the left, which shows February's numbers versus today. You would have had a nice increase if you had converted your dollars to gold. Silver, $30, still up substantially since the beginning of the year. But look at two top cryptocurrencies. If you're not familiar with cryptocurrencies, the most talked about one is Bitcoin, for very good reasons. Everything other than that is called an altcoin. The number 2 in market cap is called Ethereum. Most people talk about Bitcoin and Ethereum as the top 2, and then there's everything else. You can see Bitcoin has doubled since I started the show in the beginning of the year. In the beginning of the year, I've got a chart here. Here we are when I started the show around February. It's around 40,000. Now it's around 90,000. So it's more than doubled. So in other words, you could have had $1,000 sitting in the bank account, and now you would have $1,000 plus a little tiny bit of interest. Or you could have converted to Bitcoin, and your $1,000 would be over $2,000. That's the idea of buying commodities. Gold, silver. I track Bitcoin and Ethereum, and they're all up since the beginning of the year. Now we're going to get into how easy it is to buy these things. You might think it's difficult. You might think for gold and silver, you got to go buy physical gold and silver. You don't. You might think for Bitcoin and Ethereum, you have to be technical and learn how to go to an exchange and buy it. Let me show you real quick, which I always do. I've got this site. There'll be a link down below. It's got all of the ETFs. If you're familiar, you just go onto your broker, Schwab, Fidelity, whoever, and you buy a share of what's called an ETF. Here are all the ETFs that have spot. It's called spot, a spot ETF. So for every dollar you put in, they're buying $1 of the underlying asset, which is Bitcoin. So you can buy any one of these Bitcoin ETFs, any one of these Ethereum spot ETFs, gold spot ETFs, silver spot ETFs. What does that mean? It means that you can quite simply buy gold and silver and Bitcoin and Ethereum by just buying a share of these various ETFs. And then if you want to sell them and convert them back to cash, you just go to your broker, hit the sell button. Now, of course, you got to be careful and diversify, because if you need cash, you don't want to sell when assets happen to be down, and they do go up and they do go down. Bitcoin right now is up substantially, as is gold and silver and other things. Okay, now let's get into the stock market. Dow Jones tracks 30 stocks. Last month, it's been up 1.8%, but I've been doing this since the beginning of the year. Let's do year to date. It's up 15%. S&P 500, year to date, up 24%. There are ETFs, there are funds, the index funds that will track the S&P 500 and the Dow Jones 30. Again, you don't have to go out. The Dow Jones tracks 30 stocks. You don't have to buy 30 individual stocks. S&P 500 tracks 500 stocks. You don't have to buy 500. You can just buy those index funds. There have been multiple books written about the S&P 500 and how it returns a certain percentage year over year, averages a higher percentage than most fund managers and money managers can even get. They call it like a set it and forget it. Now, that doesn't mean that's going to happen continuously in the future. Over the last 10 years or so, it's actually been Bitcoin that's been shown to be the better asset of the group. However, again, you can just go to your broker and execute all 6 of those strategies. Buy a gold ETF, buy a silver ETF, buy a Bitcoin ETF, buy an Ethereum ETF, buy an S&P 500 index fund, buy a Dow Jones 30 index fund, and also have cash for your emergencies. Now, the other 2 things we like to look at, just to give us an idea of where the economy is going, is we look at the 2-year and the 10-year treasuries and their rates. The 2-year here is sitting at 4.32, the 10-year at 4.47, and then we look at the inversion. Now, you should always see, when things are going well, that the 10-year, meaning locking your money up for 10 years, pays you more than locking up for 2. If it doesn't, that's called an inversion. And we've had an inversion for a very long period of time, but we're out of that now. If we go back over time, I think I've shown this chart before. This chart will show, and I'll just tell you basically things are inverted, and then this gray is bad economic times. So usually before we have bad economic times like a recession, we have an inversion right prior to it. Doesn't mean we're going to have one now, but it could be setting up for that. So be careful. So there you have it. You can just sit on cash if you want, or you can buy assets. Now, I don't get into real estate, but real estate is also an asset shown over time, continuously grows. If you were to look at any of these charts next to one another over time, everything I've discussed goes up and to the right, meaning it gains in value. However, the dollar is the one thing that goes down because of inflation, meaning $100 10 years ago would buy you more than $100 today. We know that to be true. And lately, inflation's gotten worse. So down below, you'll see links on creating emergency funds so you have cash if you need it. There's a link down below to show you the different various ETFs. If you're interested, please do subscribe. Watch this week to week every Friday so you can see how assets go up over time, and that's how you can maintain your wealth so you don't lose that value. No reason in saving money if it goes down in value to one day hand it off to your children or whoever your heirs are if you were to pass away, and they look at it and think, well, that's not a lot. Well, if it's sitting in cash, they might think that. If it's sitting in assets, that could be a different story. I also lastly have a YouTube channel called Crypto for the Rest of Us. I've been doing daily for about 5 months. If you're interested in learning more about crypto, take a look at that channel. I'll put a link to that down below as well. I hope this is helpful. I want to help you get out of debt like I had to do after a divorce. And I want to help you to save your money by budgeting properly and then maintaining your wealth so you don't lose buying power. It's up to you to take care of your finances. No one's going to do it for you. Have a great day. Thanks for watching. And as always, I hope this was helpful.